It's almost 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Jay Powell says the second quarter data gives him greater confidence that inflation is heading down to the Fed's 2% goal, possibly paving the way for rate cuts. Also ahead, Hong Kong stocks fall as Donald Trump's pick for Vice President JD Vance calls China the biggest problem facing the US. And Apple's annual India sales said to hit a record of almost $8 billion, jumping 33% as the tech giant tries to reduce its dependency on China. All right, let's take a look at how we're tracking in markets this Tuesday in the Asia Pacific. Avril Hong's in Singapore. Avril.
Yeah, Paul, we're seeing those two themes still the play at stake here, right, for Asia markets. One is how traders are ramping up their bets of a Trump presidency, especially after the events over the weekend, and then now he's picked his running mate, but also dovish Powell with those expressions of optimism, confidence to progress on inflation. Today, we're hearing from JD Vance talking about how he sees China as the biggest threat to the U.S., just ramping up the rhetoric here towards the Asian giant. And I think that is something that analysts have already been pointing out as they brace for some of these protectionist policies. How would that affect the external finances of some of these Asian economies? So as we've been discussing about, we see how Trump has a pretty zero-sum view of the world. That could be positive, supportive for equities in Japan, not so much so the ones in China. The Hang Seng is underperforming today, of course, just exacerbation from what we already saw yesterday after that big miss on China data. The one asset class that I think is kind of benefiting from Powell's comments is bonds. We're seeing those in Japan tracking what we saw in treasuries, that reversal overnight. Let's take a look at some of the stocks that we have been focusing on with JD Vance now the running mate of the former president, and we are seeing investors kind of weighing out exactly what this is going to mean for EV subsidies. Most don't think that we're going to see the Drive American Act being implemented. This is, of course, the act that would cut some of the consumer tax credits for EVs and then replace them with ones that will be beneficial for more conventional models, but they overall don't see much support coming for the EV industry if we do see a Trump presidency. So these are the EV battery stocks that are really coming under pressure in South Korea today, Paul.
All right, thanks, Avril. Let's just take a look at another energy stock as well. There's one that we don't really follow that closely, Energy Absolute. It's moving a lot, though, in Thailand, which is why we want to update you on this. Down 30%, that's the limit down. Energy Absolute is a Thai renewables firm. It says it is looking for a partner to help it pay off $539 million worth of debt that is due this year. It's got a credit rating cut to junk. Shares have been off 70% this year after it aggressively expanded into pretty much everything from power generation, battery production, automaking, assembly of trains, ferries, buses, etc. It's got into a spot of bother and a lot of debt, announcing a strategic partnership to boost its situation, but the market not liking that news. Energy Absolute down, limit down 30% in Bangkok at the moment. All right, Donald Trump has made his first appearance at the Republican National Convention just a short time ago. He appeared alongside his newly announced vice presidential running mate, Senator J.D. Vance. Let's get some more now with Bloomberg News managing editor Derek Wallbank. Derek, Trump appearing there with a fresh bandage on that right ear, and also the news this morning that J.D. Vance is going to be his running mate. So we have a ticket now. J.D. Vance has been previously critical of Trump. He's called him America's Hitler in 2016. I guess he's changed his mind.
Thanks, Paul. You know, J.D. Vance, one of many people, I think, in the Republican Party to go from heavily criticizing Trump to warmly embracing him. Look, J.D. Vance is not a U.S. senator without two people. One is Peter Thiel, who gave him about $10 million in his Senate campaign, and two is Donald Trump, who endorsed him in a large field, propelling him to the nomination in a red state that used to be a swing state and getting him into the Senate. So So J.D. Vance's political career is very much in the hands of Donald Trump, a person who he has, since he has come to the Senate, been an unwavering supporter of, one of Trump's most vocal defenders in the Senate, someone that annoys people like Mitt Romney, who's sort of like representative of the old way that the Republican Party used to be, that former standard bearer. J.D. Vance is a very different person. He's a millennial. He's 39 years old. He comes up through tech and tech, affiliations there. So there's that sort of new wave of tech. Will be quite excited by this pick. He's also someone who has come to prominence by writing a book called Hillbilly Elegy. Now, this was before he was that pro-Trump figure, but the fundamental thesis of that book is that large swaths of the United States have been left behind, and you've heard this from Vance in his remarks. You've heard this from Vance, candidly, his entire political career. It's a through line that runs through there. And you heard this. You heard those who are watching the convention coverage will have seen union officials on stage delivering what could have been in prior years a Democratic speech, maybe even talking about the need for more protection for workers. This is going to be somebody who is very skeptical of U.S. efforts towards Ukraine, who has been very skeptical of trade deals, who, as you mentioned, has been very critical of China. So all of those things are coming forward. But again, Paul, I'm not saying that that's necessarily a big change from where Donald Trump himself has been. You have heard all of those words from Trump himself. So in some ways, as we've been talking about which way was Trump going to go with this VP pick, is he going to pick somebody to help him govern? Is he going to pick somebody who might be a moderating force? Or is he going to pick somebody who might be the apprentice and maybe next heir apparent of the MAGA kind of movement? He's very much gone in the latter camp here. Mm-hmm.
Yeah, well, very much a festival atmosphere there at the Republican convention today. Plenty of news flow as well. But we heard earlier from President Biden, also in an interview with NBC's Lester Holt. Let's have a listen to some of what was said.
The truth of the matter was, what I guess I was talking about at the time was, there was very little focus on Trump's agenda.
Yeah, the term is bullseye.
It was a mistake to use the word. I didn't say crosshairs. I meant bullseye. I meant focus on him. Focus on what he's doing. Focus on his policies. Focus on the number of lies he told in the debate.
Yes, an unfortunate choice of words there from President Biden, but it underscores a problem in a way, doesn't it, Derek? I mean, not only are there questions about Joe Biden's age, now there's the problem of attacking a candidate that's just survived an attempt on their life. Where to here for the Democrats?
Well, yeah, Paul, that's exactly right. And I think that this is a bit of an unprecedented moment, certainly in recent political history in the United States. There's no playbook for how to do this. And Joe Biden is trying to find a way to criticize what he sees as an existential threat to American democracy and the positions that he holds dear from both Trump and Vance, and while balancing that against the fact that, look, violent imagery right now is not something that politicians, I think, of either party want to be involved in, certainly because it became quite real in that incident, that shooting incident against the former president. So I think that's a little bit of a difficult thing. One thing I would key on from that interview with NBC is that Biden was asked if there's been any change in recent days on his idea of still being the Democratic nominee, of still running. And Biden said there has not been. There has not been any change in his thinking at all, in that he has the preponderance of delegates. He wants to be the nominee. He's earned it, and he's going to keep doing it. Mm-hmm. And that's the line that's coming from Biden still.
All right, managing editor for breaking news in South Asia, Derek Wallbank there. All right, the Fed could also play into the election race if any interest rate cuts come before November. Fed Chair Jerome Powell says recent data is giving officials more confidence that inflation is moving towards their 2% goal. Speaking with Bloomberg host David Rubenstein, Powell highlighted the 3 latest inflation readings but didn't provide clear timing for a possible cut.
The labor market remained very strong, unemployment remained very low, and inflation came down at quite a sharp pace, particularly in the second half of the year, by a very large amount. And that forecast was almost unheard of. It was unheard of before 2023. So big upside surprise that year. This year, we had expected the economy to slow a bit gradually, the labor market to continue to gradually cool off after being overheated a couple of years ago, and inflation to continue to make progress. And something like that is basically what has happened. The economy is growing now at about 1.5% in the first half of the year. Most forecasters have about a 2% growth rate for the full year. The labor market, again, has moved into better and better balance to the point where I think you can now say it's essentially no tighter than it was in 2019 before the pandemic. Remember that the labor market of 2019 was a very strong labor market. So we're back to that place, no longer overheated. On inflation, in the first quarter, we didn't make any more progress. The second quarter, actually, we did make some more progress. We've had now 3 better readings, and if you average them, that's a pretty good pace. So turning to policy, your question, what we've said is that we didn't think it would be appropriate to begin to loosen policy until we had greater confidence that inflation was moving sustainably down to 2%. We've been waiting on that, and I would say we didn't gain any additional confidence in the first quarter, but the 3 readings in the second quarter, including the one from last week, do add somewhat to confidence. We've also said that we're a dual mandate bank. For a long time since inflation arrived, it's been appropriate to focus mainly on inflation, but now that inflation has come down and the labor market has indeed cooled off, we're going to be looking at both mandates. They're in much better balance, and that means that if we were to see an unexpected weakening in the labor market, then that might also be a reason for reaction by us.
Okay, I think I understand. So to put it in terms I can for sure understand, the markets are suggesting, the futures markets, that there's a 90% chance that the Fed will lower its discount rate in September. Do you think the markets know what they're talking about?
So today I'm not going to be sending any signals one way or the other on any particular meeting. So just to ruin the fun right at the beginning. I simply, we're going to make these decisions meeting by meeting, and we're going to make them on the basis of the data as they come in, the evolving data, the evolving outlook.
That's Fed Chair Jerome Powell speaking with Bloomberg host and Carlyle co-founder and co-chairman David Rubenstein at the Economic Club of Washington. Now, our next guest expects 1 Fed rate cut in September, 3 more next year. Joining us now from Singapore is Joey Chu, head of Asia FX research at HSBC. Joey, the market really embraced those remarks from Jay Powell. We've got traders now pricing in 2 cuts in 2024, and Goldman Sachs sees an argument for potentially one this month. You're not as convinced. Why is that?
I think our HSBC's U.S. economist, he still thinks that the PCE core inflation could actually hover around 2.5% to 3% range. So, this gives an opening for Fed to start cutting, but it may not be too aggressive with the rate cuts right from the start. So, I want to take a more cautious and gradual approach.
So in terms of foreign exchange, do you feel like we're at peak US dollar strength now? Because the consensus is definitely firming around easing. It's just a question of how much and when. So where to next for the greenback, and particularly against, let's say, the yen?
The dollar, it's a relative game as well, because the currencies are all, quoted against other currencies, right? So for the U.S., you have to consider that the Fed is cutting, but it is not the only central bank that's cutting. A lot of G10 central banks are cutting, and for a lot of them, they are cutting from a space that is at actually a lower base than the U.S. So in terms of the absolute level of the yield differential, actually the U.S. dollar could still look quite strong. Now, the yen is a slightly different case, because as you noted, BOJ is one of the few central banks in the world that is not cutting. In fact, it is normalizing policy in an unprecedented way. It's already dismantled a lot of the Abenomics type of policies a couple of months ago. So for yen, we do actually expect a bit of a recovery when the Fed starts to cut.
Joey, I want to talk a little bit more about the BOJ in a few minutes' time, but just talking about election risk, particularly out of the US, Donald Trump will accept the nomination officially for the Republican Party at the end of the week. When he speaks, obviously there's implications here if a second Trump presidency manifests around rates, inflation, spending plans. What are the risks for foreign exchange you see around this?
Yeah, actually, apart from this presidential, the candidacy, we also have to consider the Congress makeup, because a lot of the policies that could change the direction of the U.S. economy and therefore the dollar actually requires, maybe what we call a clean sweep, right? So, for example, a lot of people are focusing on tax policies, given that some of the tax provisions actually expire next year. And so, if we do get a full extension, then maybe this soft landing that the U.S. economy is heading towards too could change direction. If that's the case, then the number of rate cuts that are being priced into the market right now might seem a bit too aggressive, too much. If that's the case, then that strengthens our view that the dollar can actually remain quite resilient, notwithstanding the Fed cuts.
All right, Joey Chu of HSBC sticking around. We'll talk about some other currencies and major markets in just a moment. And also still ahead on Bloomberg Markets Asia, JP Morgan will join us to discuss their outlook on India's IT sector. After solid earnings so far, more to come this week. We'll dig into that a little later. This is Bloomberg. All right, welcome back. Let's get over to Avril now for a look at emerging markets FX. Avril.
Really been in focus in this part of the world, haven't they? Especially as traders ramp up their bets that we could see a Trump presidency. I think this is twofold in the sense that it's not only the worry surrounding what these protectionist policies could mean for their external finances, it's also what this means overall for the greenback. I mean, this is the second day this week we're seeing the climb in the dollar and potentially how, those fiscal policies from Trump leadership could influence higher yields on the longer end of things. Today, we're seeing the Indonesian rupiah among the currencies that are really losing ground in the region today. I think second only in terms of underperformance to the Japanese yen, Paul.
All right, Avril's going to stay with us as we get back to Joey Chu, head of Asia FX research at HSBC, getting back into the conversation. So, Joey, just following up on Avril's remarks there, in Asia FX, you have said you're focusing on relative value trades at the moment. What can you tell us?
Yeah, indeed. I think we have to because, the dollar-Asia trade is quite difficult, right? On the one hand, you do have the idea that the Fed cuts are coming in, and Asia is such a low-yielding region, so some of these Fed cuts could actually give them some of this much-needed relief. But on the other hand, you have this idea that, some of the exports recovery could be under some uncertainty going forward. So I think, at this juncture, it makes more sense to just focus on relative value trades within Asia. So, for example, in Asia, among some of the lower yielding currencies, we think that some currencies like the RMB, the Taiwan dollar, maybe even the Thai baht could struggle a bit more compared to, say, Korean won and Sing dollar. Within the high yielding space, we like the INR and the IDR a little bit more than the peso.
Okay, Joey, just picking up on your point on the rupiah, we have a Bank Indonesia decision due tomorrow. But the concern also for the currency has been about the fiscal position of the new administration. Do you think that's going to be exerting pressure?
Yeah, the thing is that until we get more clarity on the new cabinet, so there might still be some lingering uncertainty. The good news is that for IDR, we went through a period of a lot of outflows during Q2 because of the dividend season. A lot of companies in Indonesia pay dividends in the second quarter. So at least what we have in the third quarter is that some of the outflow pressure has gone away, even if some of the inflows are a little bit still slow to come in.
Okay, when it comes to protectionist policies, we always
look at how sensitive the Chinese currency is, right? What do you think the signaling is going to be until we get clarity on the U.S. election in terms of the PBOC and the yuan fix?
Right. I think, we have seen some of the fixings recently starting to stabilize around 713, right? So this also makes sense if you consider, the pace of the increase since April and May. So I think it sort of makes sense that we take a breather, especially now that we have this important meeting, the plenum. So our view is, however, that, beyond this events, actually at the end of the day, we still need to consider that some of the outflows from Chinese economy is happening on the back of interest rate differential, which could be difficult to close because of the cyclical position that China economy is in. So beyond some of these events, I think we might still get a bit of a slow creep up in dollar CNY.
Joey, you mentioned the plenum there. We haven't had any announcements out of it yet, but are you expecting any that might support the currency?
The thing about plenum is that it's very medium term in nature. However, it's still important because, recently there are some concerns about the potential growth of China going forward. Now that the property sector is taking a little bit of a step back, right? If it's no longer such a big engine of growth, then what will be the new engine of growth for China economy? That's important for potential growth and for people to have confidence, right, in the long-term prospects of the RMB. So to that extent, it is still potentially quite important. The other thing about the cyclical type of policies, I think we might actually need to wait for, say, the Politburo meeting, which could potentially happen at the end of this month, for some of these more short-term measures to help solidify the economic recovery in China.
What about the impact from the yuan on the other Asian currencies? I mean, we saw how yen weakness actually kind of, provided a bit of a headwind for other currencies in this part of the world.
Yeah, naturally. I mean, the RMB as well as the Japanese yen, they are all big currencies in all Asian economies, nominal effective exchange rate basket. So to some extent, the core movements are all in place. However, what we have noticed recently also is that compared to, say, 2018, 2019, actually these days, the Asian currencies are more correlated with what's going on with US dollar, what's going on with US yields, than they are with the RMB per se.
Okay, where do you think the net impact of potential tariffs from a hypothetical Trump administration is going to be? Because I know you said earlier that it's really difficult to assess where it's going to go, but we also see how there's talk about devaluation of the dollar, in spite of what we might see on tariffs and the inflationary impact, net impact on the greenback. What do you think that's going to look like?
Yeah, frankly speaking, it is true that there are some, conflicting signals sent around this whole idea of the trade policy of the U.S. I think what we need to consider is that there's some differences between today and 2018 and 2019, which I think is the baseline scenario that a lot of people will fall back on, right? For example, back then in 2018, dollar RMB went from 620 to 720. Today we are already at 720. So in other words, it's a matter of valuation, right? Today a lot of Asian currencies are already considered relatively undervalued or cheap. The second difference is that the competitiveness, right? Because of deflation as well as other issues going on in China economy, actually Chinese exports are very competitive, as we can see from the latest trade data. And the third thing is about diversification. I think compared to 2018, China's trade surplus right now is therefore more diversified compared to 2018, whereby it's getting more of its surplus from the rest of the world rather than just from the US itself.
That's interesting. It's a bit of same but different.
Yes.
Joey, thanks very much for weighing in. Speaking there to Joey Chu, head of Asia FX Research at HSBC. Paul?
All right, thanks very much, Averill. Do stay with us. We'll take a look at markets in a moment. We'll dig a little bit more into the Fed and Jay Powell's comments today as well. Stay with us. This is Bloomberg. Let's take a look at Hong Kong and China benchmarks as those markets head towards their lunch break. A bit of an off day for the Hang Seng, off by 1 3/4%. The Hang Seng Tech Index suffering in particular. We did hear those comments earlier from the vice presidential pick, JD Vance, calling China the biggest threat to the United States. More ahead. This is Bloomberg. welcome back. As I mentioned, we've got China markets just heading to lunch. Bit of a down day for the Hang Seng. CSI 300 faring a little bit better, up by about 1/5% there. I did mention that we heard from Donald Trump's vice presidential pick, J.D. Vance. He's ramping up the rhetoric on China, calling it the biggest threat to the United States. And potential tariffs from the United States, should there be a second Trump presidency, would likely hurt China GDP as well. We've got the yuan there, still looking fairly weak, 726.48. The Shanghai Composite off by about 1/5% right now as well. Well, let's take a look at how markets elsewhere are faring. Avril Hong's in Singapore. Avril.
Yeah, we have Japan back from the lunch break, and as we see that Chinese underperformance in terms of equities, we've also been seeing Japanese outperformance, and for slightly different reasons. I mean, it was in past few months really because of the economic weakness out of China. Today and for much of this week, I think it's more because of the concerns about protectionist policies, Trump's view of the world. So might be supportive for Japanese equities. That is one theme that we're seeing in the markets today, but the other also is how if we see a Trump fiscal package that kind of supports the stocks that are economically sensitive and helps to prevent a recession. So that is the picture where we're coming back from the lunch break. The Nikkei pairing some of the earlier gains, but still 0.5% higher thereabouts. The yen has been moving in the past 12 hours or so, and this is on the backdrop of what we got from Powell, those fairly dovish comments and that expression of confidence about progress on inflation. We actually saw it hit 157.2 earlier on, shortly after Powell spoke, moving back towards weakness, towards that 159 level again. Let's flip the board, because the key theme, of course, that we've been watching is the investors preparing for this exit from the very accommodative policy of the BOJ, and all bets seem to be preparing in that direction. We're actually seeing the swaps on the 10-year turning negative among the things that we're watching today, Paul.
All right, thanks, Avril. Let's get a bit more on the markets now. Let's bring in Bloomberg MLive Executive Editor Mark Cudmore. And Mark, let's start with those remarks from Jay Powell today. We've got traders now pricing in 2 cuts from the Fed this year. Goldman Sachs sees potentially one coming this month. Is that realistic? What's the rationale here?
I do think July is live. We know that Powell has a very dovish reaction function. We know that he wants to cut given half a chance. Has he been given half a chance? Maybe a quarter of one. We have seen some slowing of data recently, particularly in the labour market. A few cracks coming through. Inflation is playing ball. It would suit to be able to start cutting now. It would depoliticize the decision being farther away from the election. It would show that the Fed was in cutting mode long before the election, and therefore it was nothing about that. So I think that, Powell's really hoping to have started the easing process by now. But is there enough? I think we'll be watching the data to come through in the next couple of weeks closely. I have to say, gun to my head, I would say that probably, Fed won't cut this month, but I do think it is live and in play. The other possibility is that they may do 50 basis points in September, because if they don't go now, there may be enough of a slowing in the labour market and a slowdown in inflation to get them to make that move in September.
Let's move across the Atlantic because the picture for the euro versus the British pound is looking kind of interesting, really. We now have a stable government with a big majority in Britain, and then across the English Channel in France, quite the opposite set of circumstances. What's the movement we're seeing in pound euro?
Yeah, I think euro sterling could drop back down to levels not seen since the summer of 2016 and the Brexit vote, back below 82. It seems a bizarre thing to say given the context of the last 8 years, but UK does seem to have a very, very stable government, at least the foreseeable future, with a very clear plan. And that plan is focused on kind of balanced and comprehensive metrics to improve growth while keeping an eye on the fiscal side, and that's very important, and trying to encourage inward investment. So So I think there's a real chance for sterling positivity to have legs, especially since we're going to have a lot of focus on political turmoil in the US in the second half of this year. And as you said, we haven't resolved the political situation on the continent in Europe, in France in particular, but it's only at the forefront of that kind of increasing divide, or that increasing fractiousness politically across the continent in Europe. But France is struggling to form a clear government with a clear plan, and at one side they're getting massive pressure to curtail their spending, to watch out for the fiscal deficit. On the other hand, the people competing to form a government all want higher spending. So eventually there's going to have to be some compromise made, and that compromise will either be a threat to the fiscal situation or slower growth. Neither is particularly good for the euro. So I think that euro sterling is not going to suddenly become a wildly volatile or exciting trade, but I think that we can have a sustainable downtrend in euro sterling to bring us into a new kind of range that we've not traded for the last 8 years. And I think that's where we're headed in the second half of this year.
Yeah, well, in terms of political risk, it looks like the US is the biggest show in town right now. Well, the past few weeks have been pretty wild, starting with that disastrous presidential debate with Joe Biden, questions circulating about his age, and then an assassination attempt on the weekend. And now today, just a few minutes ago, JD Vance calling China the biggest threat to the United States. So what's the political risk here for Asian markets?
So as we kind of price now, I think we're pricing the highest probability of not only Trump winning, but there being a red sweep, which is very important. I think one of the things that people haven't got too carried away in trading Trump trades before this weekend was the idea that he was going to face a divided House and therefore wouldn't be able to enact many of the reforms he wants to. Now there's a real possibility, I won't say a high probability, but a real possibility that there could be a sweep for the Republicans, and that's currently how polling would give that chance at the moment, and certainly some of the predicted markets are trading as if that's just over 50% chance. That changes the dynamics, and that means we're now at the kind of the peak trading of Trump trades and Republican trades. Now, with almost 4 months to go to the election, I think there's enough time for other shifts in the narrative and the election narrative to come, and I'm not making a prediction which way they will go, but given that we've got a quite heavy pricing towards assuming that Trump will be the president and might even have House support, it would seem like the logical political trades, maybe after the next kind of 24 hours when we fully price that Trump bump, would be to actually price for that to fade, for some new developments to add increased uncertainty again. So I think that in that context, looking at Asia, of course, one of the big focus of Trump and JD Vance, as you mentioned, has been this focus on China. JD Vance saying China is one of the big issues. For a long period of time, we've expected those kind of tariffs likely to come in under a Trump presidency. Now they're pricing increased likelihood of that. That means that if there's any pairing of those Trump odds, it might actually be a boost for China assets in the coming weeks. Combine that with the China plenum on this week, well then suddenly you've got a chance for an asset that's priced very negatively, got a very low bar for a positive surprise. Maybe there is a chance for some positive surprise for China assets in the weeks ahead.
Yeah, well, if the past couple of weeks are any guide, predicting the next 4 months is going to be a fool's game, Mark. But I just want to talk about today's MLive Pulse question. What's going to drive stock prices in the second half?
So I think earnings are a very, very key part, and they provide a very positive tailwind, and that's very important. So you've got earnings, you've got the central bank reaction function, which is dovish, so those are both very positive. The third thing is the economy. There's been a little bit of cracks coming into the economy, but it looks like the economy for now will still avoid a recession. You need to remain flexible in that because it's not a continuous thing. It suddenly goes off a cliff when it goes, but at the moment it doesn't look like it's going off that cliff, which means that the extra element that's going to come in is that political risk. Now, the political risk is more likely to play out in sector decisions, so it's going to play into the rotation trade. But I think the macro backdrop outside politics is actually quite positive for stocks. So what will drive it? I think earnings, that central bank reaction function is predictable. I think it's the economy we need to change, and if any shock events on the political side, maybe it doesn't impact the whole index, it's about sector impact.
All right, MLive Executive Editor Mark Cudmore there. Thanks as always. Still to come, JP Morgan says the IT earnings season in India has been largely better than expected. So we'll discuss their outlook for the sector next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You are watching the India Focus, and here's a look at Indian markets just ahead of the open. Looks like it's going to be a flat to modestly positive day when we get going. Sensex pre-market just better by a few points. The Nifty Bank Index looking kind of flat at the moment as well. We did have trade data out of India for the month of June late yesterday. The trade deficit narrowing there, just shy of $21 billion. We saw imports contracting, particularly coal and gold imports. Exports, meanwhile, picked up a bit. Engineering, electronics, pharmaceuticals picking up as well. So that all contributed to that India trade gap narrowing in June. Plenty of stocks to watch when we get going this week as well. We'll discuss earnings shortly, but we had HCL, TCS Tech towards the end of last week. We're waiting on Wipro, Infosys as well. A couple more big IT companies also involved in e-business, supply chain solutions as well. Looks like we're going to get another modestly positive read from those companies as well, but we'll get results from them shortly. Apple suppliers, meanwhile, making gains in Asia after the tech giant hit a fresh record high on Wall Street. Bloomberg has also obtained exclusive sales figures for iPhones and other products in India. So let's get some more now with our tech reporter, Annabelle Drulers. So, Belle, the numbers painting a picture of Apple shifting further away from China. What's going on?
Yeah. That's exactly right, Paul, because we've got these exclusive information really around how many sales Apple is managing to make in India. It's, as a company, not required to report these, but we did get insights on that. So essentially what we're hearing is that in the 12 months ending March, Apple sold around $8 billion of devices in the country. About half of that was spent on iPhones, but that $8 billion, it's up from $6 billion, you can see here in this chart, the year prior. So that's around a 33% jump. It really feeds into that broader narrative that we've, of course, continued to track around India. We know that there's a growing middle class there. Apple products, like iPhones, are really still seen as a luxury item in the country as well. And it's an area where Apple can look to continue expanding, given that the market so far is really largely dominated by Android-powered devices using Google's system. Of course, they're cheaper. Chinese ones are often, and iPhones really just make up a very small proportion of total mobile device sales. They're around 3.5%. That's according to Counterpoint Research. So yes, $8 billion, it sort of pales into comparison when you look at China, which is north of $70 billion, but room to grow. And that's what Apple is really looking at.
How about manufacturing plans in India? Are we seeing a shift in the landscape there as well?
Yeah, there has been a shift. We've got some Apple production already in place there. So what they're making is the iPhones, in particular, the latest iPhone 15, for instance. And there has been a big pickup because around 14% or 1 in 7 of its marquee devices were made in India last year. That's around double again the year prior. So you're just continuing to see that ramp up. CEO Tim Cook, he has certainly been very clear that he sees India as a destination for manufacturing, and also from the consumer side. He's been to India a couple of times, or rather last year, but to open 2 of the new Apple stores. And he has said that it's a very exciting market. It's a big focus for the company. So yes, more manufacturing as well.
All right, thanks very much, Belle. First quarter earnings from India's IT services sector have so far been positive. TCS delivered a profit that met analyst estimates, and HCL Tech's net income also beat expectations. The AI boom is likely to fuel demand for services when Infosys and Wipro report results this week. So let's discuss the sector outlook now. Ankur Rudra, head of APAC Telecoms and India TMT Research at JP Morgan, joins us. Ankur, thanks so much for your time today. So we had that modest beat from HCL Tech. TCS met estimates. So what are your takeaways from the tech earnings we've seen in India so far? And can we say that the worst is now behind the sector?
Thanks, Paul, and thanks for having us today. So look, I mean, the early results season so far is indicating that numbers are coming slightly better than feared. The IT services sector has seen a couple of years, in fact, 1.5 years plus of earnings earnings cuts and relatively weak trading. So we are beginning to see slight improvement at the bottom. I think what we are not seeing is very significant beats yet. The early indicators are there are some changes in momentum. Some of the sectors, such as financial services and TMT, which are significant parts of the portfolio, are beginning to recover. And we are seeing some improvement, but the numbers so far are not driving a significant amount of earnings revisions, positive earnings revisions just yet.
Well, India is a pretty small market for some companies like Infosys and TCS. How long before you see India sales becoming a source of meaningful revenue for these firms and others?
Sure. So yeah, India remains a relatively small part. These are all largely global exporting companies. India is between 2% to 5% of revenues. Having said that, India is doing rather well for some of the companies. One of the biggest companies did report a very, very strong India growth number this time on the back of a very large telecom deal. But we think the business model for these companies is largely geared to providing labor on a global basis. So India unlikely to grow beyond 5 to 10%. The global, outsourcing story will drive most of the earnings momentum in the medium to long term.
So we've got Infosys and Wipro reporting in a couple of days, or this week at least. What are you expecting here in terms of results?
I think the expectations have risen for the companies that are yet to report. We've seen better than feared numbers. The setup into the earnings season has been very, very demanding for the stocks because the stocks have rallied from the bottom in the last 40-odd days. So we think the bar has been raised for the companies which are yet to report. These companies will potentially have to beat expectations, if not raise the guide, for sustaining the valuations we've seen so far.
So you note also that there's been some excess hiring in the Indian tech sector in 2022. Do you anticipate this slowing down? What are the implications for engineering graduates as well? And might we see some layoffs?
Yeah, so I think what's interesting is we've seen a huge amount of volatility in the hiring momentum. A couple of years ago, post-COVID, there was a significant hiring boom thanks to significant growth for the tech sector globally and the tech services sector in India. There was an element of overhiring which has been corrected in the last 1.5 years, especially as the demand has sort of slowed down. At the moment, companies are still grappling with relatively lower visibility, and they do have, to an extent, excess benches. So there is an effort to managing the cost base, there's an effort to restrict hiring, especially we've seen a lot more focus on using the existing benches and driving up utilization to maintain margins. I think from an engineering graduate perspective, hiring has been soft for the last 1.5 years. We would have to see demand structurally improve or recover over the next 1.5 years for graduate hiring momentum to restart. And to an extent, this does depend on global tech cycle, global business momentum, because the hiring in India, remember, is not just hiring by the large IT services companies themselves. There is also the global enterprises which have significant large captive centers in India like Microsoft, Google, Apple, etc. So I think a lot of that hiring will be supported as we see overall hiring return to the tech sector.
So which of these companies do you feel is best positioned to take part in the AI boom and benefit from it?
So I think, what we've seen so far on the AI side is very interesting. We've seen a lot of smaller contracts on the AI side as large enterprises are trying to explore how this impacts their business. To an extent, a lot of the work is to set up guardrails to use AI responsibly within enterprises. To an extent, there's a lot of work on cleaning up the data that enterprises have. So we are seeing very, very small projects right now, a lot of large number of small projects. We haven't seen projects scale up significantly in size, but in the next 2 or 3 years, we think there will be twofold impact on these companies. One, there potentially will be a lot of AI projects and boom, like you said, on consulting and discretionary services such as application development. However, there'll also potentially be the headwinds of reducing the extent of labor involved on some of the more legacy services such as business process outsourcing, application testing, operations, and so on and so forth. So there could be a positive in the short term and the long term. In the medium term, there could be some headwinds that these companies face.
Yeah, and at the moment, one does get shades of the dot-com boom sense. That's very trendy to tack AI on the end of your name and pretend you're doing AI. Which companies in India are best positioned to actually make money off generative AI?
So I think if you look at the large IT services companies in general, they have potentially exposure which is less than 2 to 5% of revenues at the moment. Some of the companies which have a better and higher proportion of services from consulting, from application development, I think those companies will be better positioned to gain, as opposed to companies which have got more exposure to some of the more legacy and operation side of the fence. So I think that will break up how companies are exposed and who sees more growth. Unfortunately, I'm not allowed to take company names, and hence I think I'll leave it there.
All right. Well, look, it has been, you can talk about the weather, I'm sure. It's been a really hot summer in India. And, of course, AI data centers, very power hungry. They need to be kept cool as well. Is there a risk here around India's energy security and having the potential to hobble AI development?
Stages of data center investment, a lot of large telecom companies and a lot of large conglomerates have decided to invest significantly. So you look almost all the major telcos in India, whether it is Bharti Airtel, Reliance Jio, and some of the other names also are investing quite significantly. If you look at the amount of investment on AI or data centers in general, it does need a significant amount of investment. So one of the biggest increases in data center capacity across Asia Pacific probably will be in India. At the moment, we are not necessarily seeing a significant supply shortage. It depends to an extent which part of the country these DCs will be located, which might impact the supply of energy, to those parts. So, for example, if they're located closer to coastal cities, it's probably less impacted. Some of the more landlocked cities, such as Bangalore, are seeing, problems on the supply side, which might be a bit more impacted. So, to an extent, it depends. And I think a lot of companies will think about how they locate the data centers.
All right. Ankur Rudra of JP Morgan, thanks very much for joining us today with your insights on the IT sector in India and the outlook for earnings as well. Let's take a look at Indian markets, how they're tracking at the moment. Well, I'll check in on SpiceJet as well, doing pretty well, up about 6% at the moment. We saw a pretty healthy set of numbers reported from SpiceJet, fourth quarter profit jumping by 6 times, so 14.1 million, so it's coming off a pretty low base. SpiceJet's market share has slipped a little bit, according to India's aviation regulators, 5.4% market share, so that's down a little. But the airline trying to cut costs, trying to get on top of its revenue issues, and the market welcoming that set of numbers from SpiceJet, currently better by 4.6%. All right, we have plenty more ahead. Stay with us. This is Bloomberg. Here are some of the top corporate stories we're following. Bloomberg has learned that Salesforce has cut about 300 roles as part of its broader effort to streamline operations. Sources tell us the software giant made the cuts this month following earlier rounds of job losses starting at the beginning of 2023. It's the latest example of the tech industry reining in costs following years of rapid hiring. Stripe's valuation has edged up to $70 billion as Sequoia Capital offers to buy shares from investors looking to cash out. Sources say Sequoia is offering to buy Stripe shares at over $27, the venture capital firm reportedly buying up to $861 million in shares. Stripe helps merchants process customer payments and was recently valued at $65 billion. Okay, let's take a quick look at how markets are doing, particularly those so-called Trump trades. We did, of course, see Donald Trump making an appearance at the Republican National Convention a short time ago with a heavily bandaged ear. J.D. Vance calling China the biggest threat to the United States. We saw the 2s10s briefly disinvert during the U.S. session. The Mexican peso still showing a little bit of softness against the greenback, and Bitcoin, well, that continues to rise up about 1.5%. And there's a look at U.S. futures ahead of the open as we continue to go live from the Republican National Convention when trading begins tomorrow.